G'day folks, welcome back to another update for the S&P 500 and the NASDAQ. Now they're both continuing in a downtrend. Before we go any further, make sure you hit that like and subscribe button to support the channel. As of today, April 3rd, earnings growth. Analysts project S&P 500 earnings to grow by 11.5% in 2025, down from earlier estimates of 14.8%, with first quarter growth expected at 7.3%. Valuation metrics, the S&P 500's forward 12-month PE ratio stands at 20.5, above the 5-year average of 19.9 and the 10-year average of 18.3. Impact on tariffs. Recent tariff announcements, including baseline 10% tariff with higher rates for specific countries, have raised concern about inflation and potential economic slowdown affecting market sentiment. Market performance in first quarter 2025, the S&P 500 declined by 4.6%, ending a 5-quarter winning streak, while the NASDAQ composite fell by 10.4%. Marking its largest quarterly pullback since second quarter 2022. In terms of the sector outlook, the information technology sector is expected to continue its growth trajectory, with projected earnings growth of 12.7% in the first quarter of 2025. Looking at the S&P first, look at the long-term trends. On the monthly, we've got a bearish divergence here, lower highs on the CCI versus higher highs on the price. And the price actually started to retrace in the last couple of months in alignment with this CCI break to the downside of that moving average. And I've drawn a target area here of where that initial target may be as a minimum. Of course, could go further. And the way we measure that is we take a Fibonacci and we take it back to the previous low before that divergence started. And that's at 38% range. So again, hasn't reached it yet. It looks like it's on its way there. Again, it could go further, a lot further than where it's further than that point there. Or it could do this. It could actually bounce out of there. And that was a previous divergence back here. And we drew the Fibonacci down to that level, and that was the 38% range, and it bounced out of there. So it could do that as well. So we'll just see what happens. We'll take it one stage at a time. On the weekly, we had another bearish divergence here. I drew a target range here, and that's actually broken well past that. So it's bearish on the monthly, bearish on the, well, somewhat neutral on the monthly, bearish on the weekly, and bearish on the daily. The daily here, we hit this resistance up here at 61.47, had almost a double top up here. But we also had this double top on the CCI versus higher highs on the price, broke down, and that actually broke a lot further than that previous 100% range. So at the moment though, we did actually previously have this double bottom on the CCI versus lower lows on the price, and that actually bounced. You can see there, hit that with that wick of that candle, it broke into that 38% Fibonacci range. And again, if I was to draw that range there, it's at 38% level. So again, that's where you measure it. Now, since then, the prices retrace back to the downside. The CCI has also fallen further. So now the CCI is moving in alignment with the price. So that's actually, that bullish divergence actually worked. Again, touched that range and bounced to the downside. If we go to the intraday charts, let's look at the trend first to get an idea of what's happening. We look predominantly at short trades only because the CCI and the price are broken below their respective moving averages. But notice here, we were tracking along this, if I zoom out, we were tracking along this diagonal descending trend line. It's actually gravitated towards that a few times, and more recently did that in the last, this is the hourly chart, hit it there a few hours ago. But notice what it's done now, it's giving us this bullish divergence, higher lows on the CCI versus lower lows on the price. So again, to get an estimate of where that may bounce or hit as a minimum, you can see there it's not far off at probably next hour or two. It'll break into that 38% range. So let's just draw that there. So it's not far off that at the moment. Of course, it could go a lot higher, but notice the CCI is starting to bend a bit and turn to the downside. So it may actually touch it and break further to the downside. So just cautiously wait for that to continue in a downtrend on the CCI if you're going to trade on this on the hourly to go short. And what we have here is the back testing. So I've got the stop loss approach up here and the average down approach here. And we start both of those when on the daily, the price just broke below the moving average range, and so did the CCI at that point there. That's where you would have started going short on either of these strategies. So the stop loss approach has generated so far $530 odd, and the average down approach has generated about $2,500. And of course, it hasn't traded during that middle period when the price is moving in the opposite direction. You'll know contracts being held. So at the moment, avoid going long. I wouldn't be trading long on this one. Go predominantly short, as long as the daily is going in a short direction as well. If you saw a bounce like this with a bullish divergence and the price was also, or the daily was also bullish, then you may want to take a long trade, but at the moment, take only short trades. So the NASDAQ's got a similar story. On the monthly, bearish divergence versus high highs on the price. Drawn a you can see that it's just touching that moving average range and almost touching that 23-38% level on the Fibonacci. So that's almost hit that. So again, we'll see if that's going to bounce out of there and go further long, or will it go further to the downside. The weekly is showing continuous bearish momentum, so that's probably going to give us some more of a bearish look on your monthly as well. So again, no sign yet of a pullback on the weekly. That's also been a bearish divergence, which we drew back there some time ago. That broke well below the 23-38% range. And on the daily as well, we hit this resistance up here at 22,225. It broke down again, similar sort of diagonal trend line. It's been hovering around that, and it's still dropping. Again, you'll notice the CCI is still in a downtrend with no sign of a pullback yet on the daily. If we go to the 1 hour chart, again taking short trades only. Again, you'll notice here as well, we've got a bullish divergence similar to the S&P versus lower lows on the price. And if I was to draw a retrace on this one, let me do that again. We go from that low to that high, that recent high before the divergence started. And again, to draw a target range, we look at the 23-38% range. So again, hasn't reached it yet, and it may well get that far, or it could actually fail. If it fails, obviously, and the CCI keeps dropping and it drops below that area, will invalidate the divergence. But at the moment, that's still in play. We may see further upside in this one on the hourly. Now, if we go to the stop loss approach and the average down back test, let me just get rid of this Fibonacci, make it a bit cleaner. What we're looking at is predominantly short trades only, and again, similar to the S&P, you would have taken a short trade on that dotted line there where it broke below on the moving average of both the price and the CCI. That's where this back test would have started, and on each of these it had entered a few trades here, and on the average down one, it averaged down more recently there, and that's still in a trade on that one, actually still live, and so is the stop loss approach. But at the moment, the stop loss approach has generated 395, and the average down approach has generated 694, 91, 92 as we speak. But again, notice it may be worth, as soon as you see that bullish divergence, it may be worth taking your profits, being happy with that little bit of gain, no matter which strategy you're using, and waiting for a further break to the downside on the 1 hour CCI. So here are the back testing or trading parameters. So if you're trading on the 1 hour time frame, you invest per trade one contract, the first contract entered, and you average down limit of 15 contracts. So basically the contract entries, the first one is one contract, next lot is 3, you got a total of 3 contracts now running, add another 4, you got a contract, 7 contracts running, add another 8, and then you got a final of 15 contracts maxed. And every time you average down, you make sure it drops by at least 0.005% for a 1 hour trade or contract parameter. If you're trading on the daily, the average down is 5% decline. Now, trading shares is very similar. Invest per trade $1,000 per trade. So you invest first $1,000, next lot is $3,000, next is $7,000, and finally you got the max of $15,000. And again, average down by 5% if you're trading on the daily time frame, and take profit of 3%. If you want to follow the traditional stop loss strategy for trading CFDs on the 1 hour time frame, you invest one contract per trade, take profit of 0.003% or 3% for a daily trade if you're trading on the daily time frame, and a stop loss is when the CCI 150 turns into the moving averages. Likewise, if you're trading shares, if you're trading on the daily time frame, invest per trade $1,000, take profit is 3%, and again, stop loss when the CCI 150 turns into the moving averages. Obviously, you can invest more than $1,000 in any of these trades, but you've got to be very careful of the your money management and your account balance. And I've limited it to 3% take profit on the daily and 0.003, the equivalent for the 1 hour time frame, because I found if you make it too high, in other words, if you aim for a 5 or a 10% gain, often you're a lot longer in the trade than you really expected, and it just gives you a lot more turnover when you're the smaller take profit return. To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching and see you in next week's video.